T.R.I.P. T.R.I.P. Don't miss your trip. Thank you for taking just a few minutes to watch this video. We know you now have the daunting task to compare us to your current advisor and the two other advisors that you were shared with on the Smart Asset platform. So we put a short video together for you so you can try and make a simple comparison. There's 4 key points to the foundation in T.R.I.P. T.R.I.P. is for tax reduction. The R in T.R.I.P. is for risk reduction. The I in T.R.I.P. is for investment selection. And the P in T.R.I.P. is for the all-important part, plan. As an affluent investor, an investor with over $1 million in invested liquid assets, taxes are most assuredly going to be your #1 expense over your lifetime. But what I've found is few affluent investors actually understand how this taxation is going to affect them over time. So to help them understand this, I drew from a story that I was taught as a young boy. I don't know if you heard the story, but the story was about the 3 billy goats gruff. And it was a simple concept that when the billy goats started off in the morning and went over the bridge into the field to eat the grass for the day, there was a troll on the bridge. And the troll exacted a toll. And this is exactly what you have, not every day, of course, but every year for the rest of your life. When you start to understand that it's not about what you pay in each individual year, but the tax liability that you have over your lifetime, and that cutting back or minimizing surges by spreading those taxes out is probably the most impactful thing that will ever happen to cutting your taxes. Probably the most common and the largest tax liability consequence that you'll have in the tax toll bridge dilemma is RMDs. Most of the affluent clients that come into me have large 401ks or IRAs or 403bs or deferred comps. And a lot of my clients don't spend a lot of money, which means that this wealth is going to continue to amass and accumulate over time. And when they reach RMD age, large amounts of these assets are going to be forced on to that investor, and they will pay a very high tax and tax rate to take that money out, even if they don't need it. And this creates a surge in income. Remember my illustration of the tax toll bridge, and that we don't want to have huge amounts going over the bridge in any one year, because the troll gets very feisty and takes a major part of that. So we want to try and spread that out. So think about it, RMDs, and we can help you calculate what your RMD tax liability will be in the future. Taxes aren't just about the mass of investment. Of course, taxes are about the movement of money and the income. And of course, everybody is going to have the income of Social Security. And although Social Security is somewhat of a repaid blessing, and the great thing about Social Security is it will go for the rest of your life once you start taking it. The bad thing about Social Security is it's a heavily taxed asset. With very few exceptions, most of my clients are in the highest Social Security tax bracket. They're jointly making over $44,000 a year, and 85% of their Social Security will be taxed at their income bracket. There's ways, significant ways, to not only maximize Social Security, but at the same time reduce the taxes paid. Business owners have special dilemmas that we are experts in. The dilemma is this: you don't have a big 401k possibly because you've invested your life savings, and all your hard work and sacrifice into a business. And so you go to sell that business, and of course you know there's different kinds of assets in that business. There's goodwill, there's equipment, there's property. All those are looked at differently by the IRS. And we can help you out with 1031s and 1035s to reduce your tax liability significantly on the sale of the business and over the years post that business sale. The second letter in our acronym TRIP is R, which stands for risk reduction. So I've given you a quick blush on tax reduction. Let's talk about risk reduction. Even though you have amassed a significant amount of money, it's important that we try and guard you against catastrophic issues in the economy and in the world. Of course, you want to preserve what you have and also get growth. Preserving what you have takes special strategies, unlike the strategies we use with growth. One of the first significant strategies we use is maximizing your Social Security. And we'll do an analysis on your Social Security, and if you're married, your spouse's, and look at the best combinations to maximize the payout of that Social Security over time, and also complementary, reduce the tax on that Social Security. Pensions come with a selection risk. Of course, most pensions will pay out over a lifetime, but what I've seen is sometimes a spouse will pick a pension that doesn't transfer to their spouse. So the husband has a pension and he doesn't pick a selection that will transfer to his spouse. Of course, there's risks associated with that. And we can look at very creative ways to make that selection and eliminate that risk. Or look at the different combinations of that pension, the different payouts, and make sure that that maximizes your cash flow and your net worth over your lifetime. Sometimes I'm approached by very cautious investors, and they would like to create guaranteed streams of income because they're worried about the economy or politics, or they're just very conservative. There's very creative ways today that we can do this and do this at low cost to help people have peace of mind that they have some guarantees of income in their portfolio beyond Social Security and possibly a pension if you have one. Another big mistake I see is people forgetting that crossing this bridge creates the taxable situation, and that crossing these toll bridges with a large amount because it was unplanned, which I'm going to get to the plan here later, creates a massive tax liability. You know, vehicles are costing lots of money these days. A good, nice, brand new pickup truck to pull that camper behind might approach $80,000 or $90,000. And of course, taking that money out of your IRA would mean $80,000 or $90,000 of income added on to the income you already have. So with our clients, we like to be proactive about such situations and possibly spread those income withdrawals out over several toll bridges or several years. This can significantly reduce the amount of tax you pay. Remember, folks, it's not what you made, it's what you keep in the end. When the wheat gets processed and the chaff gets blown away, we want to leave you with the biggest kernels possible. avoiding taking money from accounts that are down significantly. So at this present filming, the market is down a little bit, and we're trying to avoid taking money from our clients' more growth-oriented assets. In fact, I have a very proactive plan, which if you decide to interview me, I'll share with you how to put a proactive plan in place where you're withdrawing from safe assets that have limited exposure to the market, therefore reducing your risk over time because you're not, taking $2,000 out and using beaten up shares, and once you steal those from the account, they'll never go up again. So we take them either from a protected account or a very conservative account in order to avoid that. Secondly, we'll look to be proactive when markets are up to harvest gains off the aggressive accounts, put them in the conservative accounts to preserve and make safe future cash flow, thereby achieving growth and also reducing risk. And the definition of risk reduction here is preserving future cash flow. Really, that's what it's about. The third cornerstone of the four is investment selection. And so many times I see affluent investors come in with portfolios that look like a portfolio for a 35-year-old. All right? You've saved up a large amount of money. Typically now I'm dealing with multimillionaires, and you deserve a more sophisticated allocation, a more sophisticated portfolio. Step number one would probably be to look at individual stocks instead of mutual funds, thereby reducing risk and most likely increasing the possibility of gains when the market is up. In fact, I will talk to you about the opportunity of becoming almost your own mutual fund. You're at that stage now where you've saved enough to do that. As a complement to stock portfolios, which are aggressive in growth, by definition, the other parts of your portfolio will look to use cost-reducing investments, possibly exchange-traded funds, possibly iShares. It doesn't mean we won't use mutual funds once in a while, but for the most part, as a sophisticated investor, you're past that stage. In our stock portfolio selection, we're also going to want to talk to you about what stocks we're holding. Now, there's a fine line here, but as an affluent investor, we want your input in how to design that portfolio. And maybe you don't like certain stocks. Maybe there's a great stock out there that we'd like to put in the portfolio that you don't like for personal reasons. You know what? You deserve a very unique design in your portfolio going forward, and we'd be happy to not purchase that stock to make sure that you're satisfied with the holdings that we have for you. We have searched across the country for investment managers to help us with your portfolio. This is what I call an all-star lineup. And these portfolio managers that we give you access to perform in all different and unique kinds of disciplines. We have an asset manager that deals mainly with growth stock portfolios, picking individual stocks in the growth arena. Of course, right now, tech is your friend, and tech has got a lot of momentum, and we would suggest with AI that that's probably true for the next 5 to 10 years. So we have a really good aggressive investment portfolio lead. We have other portfolio leads all the way down to the conservative portfolio. We have an investment committee member that has managed money for banks and pension funds. So this person tends to be more conservative. So if you think about, as an example, a football team where there's all different kinds of players, my job is to help you pick out the right players for your team. Maybe you don't want to be throwing the ball down the field on every play. we love designing a unique portfolio to you where we have some aggressive, some balanced, and some conservative things in your portfolio. In fact, I like to bucketize for you. It's more work, but I think the rewards of a bucketized portfolio are more evident and easier to understand. As an accredited investor, you have access to investments that the normal, average American investor does not have access to. And of course, we have a full portfolio of these investments to share with you, depending on your situation. Prior, I mentioned business owners and 1031s and 1035s, the possible use of opportunity zones and tax deferral, and also tax-free growth that the average investor is regulated away from being a participant in. What I find often is most investment advisors are too lazy to investigate and research the very complex investments that an accredited and or affluent investor has potential access through via regulation. We go the extra mile for you, putting a very unique asset blend together so you can exploit the markets to your favor. And our fourth and final cornerstone of T.R.I.P is P or plan. The focus on the plan, and I cannot emphasize this too much. A poor plan can ruin a large amount of investments. It's really important that you have a good plan. And surprisingly, I can't tell you how many affluent and accredited investors come in my office and have no plan at all or a very simple plan. And you are the ones that need it the most. The toolbox I put together for your plan becomes the strength of the system, as you deserve. This toolbox and this plan is very comprehensive and very rigorous and looks at many facets of your financial situation and plans them all out, puts them in place. We have lengthy conversations with you on how to do that, getting your feedback so we can culture the best situation for you, your spouse, and your family. The major motivation of this rigorous plan is the result that at the end, you, one, understand what we did and why we did it. And then through that understanding, it creates a great confidence in you that we're doing good things for you, that we're protecting you against catastrophic geopolitical events, and also configuring you for high quality growth moving forward. My goal is that when you leave our financial campus or we have our last Zoom meeting, that you retire to your normal life and have a great deal of peace and inner confidence that you have a great plan in place for the financial future of you and your family. First part of the financial plan is doing some homework. Again, I'm surprised when an affluent investor comes in and they were never asked to do homework by their prior advisor. I don't know how that prior advisor knows enough about them to invest their money, but if you haven't been given homework, you don't have to use me, but please find a different advisor because they don't know enough about you to do a great job for you. So the first thing that we'll do, either sharing with you an electronic PDF, or if you're in the office, of course we've got the packet printed out. It's going to cost you an hour and a half on a quiet Saturday morning with a cup of coffee to put the information together along with your statements so we can start to process and develop a plan for you. Once your homework is in and the one-page financial summary is complete and accurate, then we're going to plug this accurate information into our projection software. And I call this our what-if stage. In our what if stage, because we have projections now, I can entertain your what ifs. Jay, what if we buy a piece of vacation property in Florida? Jay, what if we do this? What if we do that? The software will paint the story for you. It will help you understand the pros, the cons, the income or the expenses on your overall investment portfolio and cash flow of different scenarios. And although I feel like I'm very articulate and that I can explain very complex situations to you, the software paints a picture and provides you with much better information to make great decisions on. In fact, I like to paint such clarity in these pictures that you can actually make the decisions up with very little aid from me. I get away from being a dictatorial advisor. The dictatorial advisor is one that just tells you what to do. I believe I'm more of an educator and a consultant, a guide, if you will, constantly giving you suggestions, explaining the pros, the cons, and the expenses on each individual decision, and then in consultation with you, helping you put together a phenomenal scenario. And fourthly, another important part of the financial plan is regular reviews. And I leave that frequency up to you. As an affluent and accredited investor, I want you to feel you have access to me frequently to review what your portfolio is doing and update the things that you're doing in your financial life. I liken this, and I'll talk more about this later, to an airplane that has a financial flight plan, right? You know, an airplane has a flight plan, just like you now will have a plan for your finances. And once that airplane takes off and launches, it's constantly correcting back to course. This is what needs to be done to optimize your investment future. There's some keys to that plan. I will not get into the details today. That is for another video down the line. If you found this video educational, we will be sending you some more in the sequence, and in one of them I'll cover the keys to the plan. One of the keys to the plan is a one-page financial summary, a piece I stole from my experience in business that combines a cash flow statement and a balance sheet, all in one sheet. A great mentor of mine told me that if you can't fit a complex idea on one page, you can't explain it. So I developed this one-page financial summary about 25 years ago, and I use it to this very day. Clients love it, and in fact, just about every rep in our facility uses that plan. Not only have I gotten good compliments from clients and reps, but also from accountants and attorneys on the utility of this one-page financial summary. I think you'll find it very utilitarian and help you understand what your situation is too. And it comes free of charge to you if you go through our process. So I hope you've enjoyed this short video on T.R.I.P. It's important that you have a great plan to minimize taxes, reduce risk, have a great investment portfolio, and it's all built within a phenomenal plan to guide you and your legacy into the future. Thanks again. Don't miss your trip.